What are the earnings of your company? You'll often hear terms get thrown around in the M&A world or when people are talking about valuing companies. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. How much does the business make? Or trying to answer the question of, if I buy this business, how much cash is the business going to generate for me? Earnings before interest, taxes, depreciation, and amortization. Effectively, what you're trying to solve for here is the net income of the business plus any non-cash expenses, which would be things like depreciation and amortization, plus any interest and tax payments. Why do you add those back? Because if the current owner of the business has a loan that's charging them $100,000 a year of interest, and I buy the business all cash, I won't have that loan anymore. And so that 100K is additional profit that I will have, and profit that you can add back into the cash flows of the company, regardless of what's called its capital structure or regardless of how much debt the business has. So it's a way of looking at the operating income or the earnings or the free cash flow of the business without thinking about what loans the company has or doesn't have. The easiest way to calculate EBITDA is to take your P&L, go through and add back in those line items, interest, depreciation, taxes, etc. That will give you a rough EBITDA number. But to start, that's a pretty easy way to get at least a base case understanding of what your EBITDA is. It's your net income plus a few of those items gets you to your EBITDA number.